your point on like commanding the room, I think some people have like anything, whether you're a startup founder, politician, or salesman. I mean, inbuilt charisma and leadership is not easy, right? And it's somewhat ingrained. You can learn it, parts of it, and you can, I don't want to say fake it, but you can develop it to some degree.
Sure. Yes.
But there is a natural level of having it inbuilt that some people can just, like you say, command the room. And it's an incredible balance of, there is such a thing as being too salesy. That's very off-putting to people. So when I get a founder that oversells, it immediately makes me suspicious. It's okay to be confident, but it has to be grounded not in overly salesy language, but in some kind of substance. And you want to see confidence in vision, not in tactical stuff.
Welcome to the Sandpit Startups podcast, where we journey into the minds of the brightest and the best entrepreneurs the region has to offer. We're here to connect the entrepreneurs in the studio with the entrepreneurs listening at home. We sincerely hope the next half an hour or so motivates, educates, or inspires you, and if it does, you know where the follow button is.
Today we are really excited to have with us Khaled Talhouni from Nuwa Capital. He's the managing partner over there. Nuwa Capital, a $100 million fund, has invested in various startups which are notable, such as Seez, Baraka, Calo, Silkhaus, and many more. Today we take this opportunity to deep dive into the world of venture capital, especially in this region, and we will also see how the market is shifting towards and what startups need to look out for. So thank you, Khaled, for joining us on this podcast. We are really excited to have you.
No, thank you for having me. I'm going to try and live up to your best and brightest intro. Yeah.
Sure, so no pressure. No pressure at all. We'll start with probably one of my favorite questions, especially for this region. Seen many startups grow here, become unicorns. But to get an understanding from a VC perspective on how this region has evolved to become a hub of startups, and perhaps also the influence of our neighboring countries like Saudi, who are also now coming up with their own unicorns. So some insights on that.
So I've been doing VC for the past, I think, 17 years or so, since I moved here, basically. And I mean, the change especially since 2018, 2019 has been incredible. Really, the watershed moment was the Careem exit, which validated the model as a whole. And then on the back of that, launched hundreds of companies, founders from that. But others saw it, investors made money, other would-be founders saw that success and wanted to replicate it. And then you have this incredible sort of what I call like a Cambrian explosion, right, of life in the startup ecosystem. So I think that's that was kind of the watershed moment. So from there, you see, funding going from anywhere per year in MENA from $400-500 million a year to now it's in the range of 2.5 billion or so per year, even though it's dipped a bit, but it's still, many multiples from where it was just a few years ago. Equally, company formation, as you see per year, we see about 2,000 to 3,000 companies being formed in the region, whereas before, the entire regional ecosystem was maybe 100 companies in 2016, maybe something like that. So you do see that kind of exponential growth in the overall ecosystem, which has been super interesting. The reasons why, I think a number of things. A, the validation of the model from Careem. B, especially in the past 5-6 years, the liberalization of Saudi, both regulatory, social, economic, this kind of big push towards moving the economy from a basically state-led economy to a much more private and entrepreneurial and innovative-based economy, coupled with the opening up of kind of, the society and immigration. And like there's an overall openness. I think that's unleashed a huge force of innovation entrepreneurship across the region. And Saudi being has become really only in the past 20-30 years the cultural, economic and political center of the Arab world or the Middle East region.
Very much.
Before it used to be in the 70s like Egypt, but it sort of migrated to the GCC. And as goes Saudi, as goes the region. And I think you're seeing the effect of that to reverberate across the region as a whole. Obviously, UAE and Dubai function effectively as the entrepot through which all of this flows. So this kind of center point where it can capture this, because in a sense it's one of those cities similar to Hong Kong, Singapore, arguably the city of London, not London itself, that are this kind of melting pots of the wider kind of regions in which they operate. So that's why I think you're seeing all this activity. There are other kind of macro reasons.
Okay.
One of the few places in the world where you have positive fertility rates left in the world, right? You have demographic growth.
Yes.
Yeah. You do also have positive economic growth. We hear a lot about MENA, the Middle East generally, about the issues with so the geopolitical environment, etc. But I think if you look at the underlying data, I think you see consistent economic growth for many years. Obviously, ups and downs, not just in the GCC, but across the region as a whole. So I think the tailwinds are quite positive, and I can go on forever on this, but I think it looks very, very, very going in the right direction.
Yeah, and when we do talk about growth and going in the right direction, it's hard to ignore Saudi, obviously. It looks like it's outpacing the UAE currently, and you've just mentioned that it's the epicenter of the Arab world. What do you sort of boil that down to, would you say, that growth in the recent years?
So I think, as I kind of started off previously, I think firstly it is this liberalization of the economy overall. So you have a concerted effort at deregulating parts of the economy. You see it in different segments. So you look at fintech, the regulator there, SEMA, is, I would say, one of the most progressive regulators in the region, if not the world, in terms of attracting and pushing for kind of the opening up of different the companies setting up there and getting regulated there. Even at the more kind of macro level, the ability to set up a foreign business there has gotten much easier. The ability to attract talent through visas, etc., has gotten a lot easier. You do see how there has been a huge concerted effort to deepen and activate public markets there, in Tadawul, and the capital public markets, that is. So with the listing of Aramco there and the really big push by the CMA to bring traditional family-owned businesses to list some of their assets, I think you're seeing that kind of movement push through. Again, also a little bit of social easing, etc. That really helps drive innovative thought, innovative thinking, entrepreneurial thought, and it's all kind of, it's incredible. It's an incredible unleashing of energy that's been pent up, right? And now it's just kind of coming through. It's one of the youngest populations in the region. And these are all kind of digitally native, internet consumers, basically, and they're hungry to transact online, but also build. So I think that's what makes it super interesting. I wouldn't frame it as as a comparison to the UAE, only because I think, with notable big exceptions, generally you want to look at, from a startup point of view, and putting my VC hat on, you want to look at companies that transcend those two major economies, and if they can add Egypt, even better, or other economies, even better. So we look at the region a little bit more as an economic block, per se, together. And the best companies are ones that are able to kind of aggregate multiple, a multitude of these markets. There are great exceptions to this. We can build country only, more in Saudi than the UAE, just because of the size of the economy is larger. So I think, but overall, I think what's good here can be good there. So I think overall, I don't see it at all as zero sum, and I see it much more as a creative process to both.
Excellent.
And also with my visits to Saudi, I understood the culture more. Being a Dubai kid, I had probably had a blind spot with what Saudi was. And it's incredible to know that the amount of local founders, because over here, perhaps it's mainly that I've seen expat driven over there, local founders, and even the brands. So I came across a food tech company, Hunger Station, apparently unicorn. It's competing with the likes of Kareem and probably has a head start over them.
I think.
I think it's bigger as well.
Wouldn't want to.
Probably
compare my former portfolio company, but I do believe it's larger. And then there's Jahiz, who's also one of the most profitable food tech, as in delivery food tech businesses on the planet, right?
Absolutely, and this kind of opened my eyes that they aren't in UAE. So Kareem had to move to Saudi and capture that market. So apart from Saudi having that perception of having the capital, but currently now you see that even unicorns are coming up every year, or probably a few. Some startups are even listing on probably with IPOs. So
I think there's going to be many. Like in the next year or two, I expect another 10. Well, let me not predict too much, but I think within the next couple of years, you'll see 10 listings between the main market, Tadawul, and the alternative market within the broad tech sphere. I can see that happening, unless there's a big change in the market conditions.
So if you had to, probably we won't want to compare countries, but as a VC, perhaps, let's say you've been in this space for so long, do you see the shift to move towards Saudi, where there are more entrepreneurs coming in from there, and their idea can cater to a larger population, and then they can probably move to Dubai and just have, let's say, a checklist of, okay, the countries that I'm going in, as an opportunity for exits in the future, because now Saudi has that population as the critical mass is already there. So what are your thoughts on that?
Yeah, I think that's, I mean, just to go back into ancient history, like I want to say in 2018, when I was looking at companies, I mean, there was virtually no Saudi companies.
Yeah.
There was barely, like maybe 5, 10 a year, maybe. I think you can see the huge shift, even by the end of that year, the number of companies formed that have really gone through the roof. I would say now Saudi founders are in a unique position to dominate their local market and then grow from there.
Yes.
There aren't many that have done it yet, because there's so much to conquer in Saudi, and the entire ecosystem is nascent, it's still early, but you're starting to see ones break through. So companies like Foodex, for example, have gone a bit more regional, and I'm excited to see more and more go down that path. I expect more and more to go there, because it's only natural to expand kind of beyond your border. But but it's a bit delayed compared to UAE into Saudi, because the local market is so deep, particularly in consumer internet. So you can kind of expand outwards once you've conquered your market a bit more. It's also not as natural for Saudi founders to expand outside of Saudi. Their mode of thinking is more local. But I think that's changing and evolving as the ecosystem there matures as a whole, and we're seeing it. It's all new. It's all like 6-7 years old.
Yeah. So, moving into funding now, with the talk of like a global funding winter, let's say, how do you feel MENA's gonna? Not that MENA really experiences many winters, true winters, that is.
Well, I'm from Jordan, where it gets quite cold.
Yes, very much.
There we go then. Are we going to experience a winter here, or we'll be
Are
okay?
we in the middle of one?
It's a great question. It's all relative, really. So as I think I was mentioning earlier, funding overall over the past 7 years went from $600 million a year to close to $2.5 billion last year, or probably this year will be slightly lower. So if you take that time horizon, no, we're in the middle of exponential growth. But if you take over from 2021 to 2023, yes, there's absolutely a slowdown in funding.
Yeah.
And you can call that a funding winter, but it's just it's the wrong time scale, I think. So if you attribute the right time scale, actually, there's overall growth. So if I project 5 years from now, 3 years from now, which is this is the life cycle of companies, right? Companies are not. We tend to think in terms of 12, 20, or 36 month, 12 to 24 month kind of periods, but actually life cycles of companies and funds is 7, 8, 10 years, right? And within that context, I think it's hard to see that we're in the middle of a winter, or that it's going to look like that, because there's just so many great companies getting formed, and there's so much more validation of the model, so many more exits, so much more kind of liquidity being generated. It's hard to see why it would not kind of continue. It does change. I mean, like, as in year to year, you can have funding go up or go down. But that's kind of more temporary. I'm much more interested in the structural and systemic changes, which are overwhelmingly positive and can only be increasingly positive. They cannot go negative unless there's a massive externality. But for those raising today, right, versus like me pontificating about the next 10 years, I think yes, it's harder to raise money today. There's less capital available. Those with dry powder are much more circumspect with respect to deploying it. And the reason is, between 2021, late 2020 to early 2023, end of 2022, I mean, it was like a feeding frenzy, right? Like there was tons of capital being thrown left, right, and center.
Yeah.
Silly valuations, silly companies getting funded, and that was this sort of euphoric belief that something, the good times will never end. And I think it's only natural for those things to get rectified, and we're going through that now, as in the velocity of capital is slower. I mean, remember at the end of the dot-com bubble in 2000, on the back of that, a lot of companies died and like funding dried up, etc.
Yeah.
But so many amazing companies grew on the back of that. I mean, most of our consumer internet businesses that we have today, your Spotify, your Facebook, your WhatsApp, your Airbnb, all of these companies grew out of that era, right? Yeah. So actually, you can see how a correction leads to better businesses getting created, more efficiency, better outcomes overall. So broadly, I'm not so worried, and I don't think it's dramatic in MENA as it is in the rest of the world. I think rest of the world there was, especially developed world, bigger drawback on funding. Here it's all nascent anyway.
So if there's such positive changes happening recently, why is it harder for companies to raise funds currently?
Because people are being more circumspect, investors are being more careful. They are weighing their opportunity cost of capital and their cost of capital much more carefully. And there's less, I would say, free money kind of floating around. So it is harder to raise money, for sure. I will say, if you're a great company, though, it's never hard to raise money. I mean, you can find capital. If you're demonstrably top of the pile, you're in the top 1%, then or top 10% of what's out there, you will always get funded. I guarantee it. It's very few amazing companies, and this is very subjective, die because they couldn't find capital. Capital is there. It may come from unusual sources, but it's there if you're demonstrably doing incredibly well.
Okay.
It's subjective because everyone thinks they're doing incredibly well, right? But
depends if the VCs do or not.
Yeah.
Yes.
Well, that's what I mean by like unusual sources. You can always convince someone to invest.
Like angel investors might be
up to a point. When you get to becoming too large a business, then if the ask is huge, then it's actually no. There are fewer and fewer sources of capital.
Yeah,
but
fair enough.
Pre-seed to Series B, there's always money if you're an incredible company.
Indeed, and especially when you're wearing a VC hat, when you invest in startups, the business model of VC is to exit from the startup, right? So the exit could be either an acquisition, it could be a public listing. How do you see the scenario of the Middle East in the last few years? Because we've had a few on the show who have been acquired. We had the Chat Food co-founder.
Yeah.
We had the Souk C-level, and we're trying to understand is acquisition that is most common in this region, or is it because we see very few going the IPO route?
Well, it's all early, right? So if you look at, if I'm not mistaken, developed markets, the most common route is an M&A process, right? An acquisition.
Yeah.
But the bigger outcomes are IPOs. So the tail outcomes by value tend to be IPOs because there's just depth in public markets you can't get in private markets.
Right.
But by number, by velocity, it's M&A is typically the route. So our ecosystem is so early that we're just starting to get a lot of M&A, right? It's just starting, and some of it's acqui-hires, so not full acquisition, which is very natural, very healthy. You're getting acqui-hires, you're getting straight acquisitions, but what's most exciting is the IPO route opening, especially in Saudi, driven by government policy, regulatory opening, validation of the model. All of these things are coming together towards opening up the IPO route. You've got two companies already, Jahiz and Ta'mini.
Yes.
I know of, without naming names, many coming through the pipe.
Okay.
There's also one very exciting one coming to the DFM, hopefully.
All right.
So in the Dubai financial market. Okay. So there's the IPO route is opening, and I think policymakers across the region have figured out that this is a huge opportunity, and I expect the IPO route to really, really open up. And it's important because I think it allows retail investors, individuals, to participate in the wealth creation of these countries, right?
Absolutely.
You can buy into, anybody can buy into, you know, the economic engines of growth in these countries through the
Indeed.
public markets.
Yes.
And those are disproportionately going to be technology companies, as is mirrored in developed markets, the largest market cap companies in the world today. You know, the FANGs in the US, the
Absolutely.
Facebooks, the Alphabets,
Absolutely.
etc. This is, so there is a social good component to this in the sense it redistributes the wealth to kind of broader cross-section of society through the public markets. And I'm super excited by this entire kind of
Yeah,
change.
it's very exciting as well because being an Indian, I've seen that many startups in India, when they IPO, there's a lot of public participation, and that kind of drives the sentiments and also drives entrepreneurs to see that, okay, this is an opportunity and it's coming, the frequency is increasing.
Yeah.
So it even drives the entrepreneurs of the region to not probably stumble, but to keep on going.
Yeah. Absolutely.
Yeah. And just to wrap up on funding here, we've got a lot of community members in our community chat looking for funding.
Yeah.
What might be a message from your side to say, hey, here's what to focus on if you're looking to sort of raise investment?
Well, send me an email at Khaled@nuwacapital.io is number one.
Okay.
Yeah.
Number two, to focus on fundraising, I think nothing beats a solicited intro, meaning
Okay.
to a VC or an investor. So find
Okay.
the VCs that you want to talk to, that you feel
Yeah.
would have a portfolio or have made public statements or have a stated kind of mandate that fits within what the startup you're building.
Yeah.
They need
And
to do
just
their
find a
homework.
way for a good intro. I think of every call, I mean, we respond to cold calls at
Sure.
Nuwa,
Yeah.
but we're just inundated with them so much. It's hard to kind of give them their due.
Yes.
Yeah.
The ones naturally that get a bit more consideration, we look at more carefully, are ones that are with a solicited intro. Somebody introduces you to them.
Makes
Right.
sense.
So if you're a startup, you're looking for funding, you say, I want to talk to these 5 VCs, I want to talk to Nuwa,
Yeah.
I want to talk to whoever.
Mm.
Then find someone who knows someone. You should be able to do that.
Okay.
That's almost your first hurdle in building your network.
Sure. Yeah.
And it's the same when you're doing clients or customers or suppliers.
always,
It's the
yeah.
same kind of thing.
Yeah.
Yes.
Yeah. You heard that, guys. We'll introduce you.
So as a founder who's trying to raise funds,
Mm-hmm.
in our pitch deck we usually have the TAM, we have the market opportunity, the ask, the team. But with your experience being in the VC ecosystem for 17 years, probably even probably getting the understanding of different markets. So what are the things that founders probably make mistakes when in their pitch deck? And I would probably also add on that is depending on the stage that they should be applying to VCs, because we have a few people who apply when they're in the pre-seed stage and then they get disheartened by not getting responses. So I feel that mostly VCs encourage seed startups, but in your experience, is there a space for pre-seed startups also, or how do you see the
Sure.
mistakes that are by founders?
So I think there's a number of questions within that. So I think the first is on when to go and raise capital.
Yes.
I think that is really dependent on the VC you're talking to. So different investors, VCs or otherwise angels, etc., like to invest at different stages.
Right.
The majority of investors in the Middle East, given their fund sizes, fall in the early stage bucket. So they could go, you can do pre-seed and idea stage.
Okay.
And I would say the majority of investors will do that.
Really?
But they'll do it on a very selective basis. The earlier you go, the more selective it is, because there's less to actually look into, less to
Yes.
DD, less to kind of think about.
Mm.
But it's really investing in purely the person who, if you know that person or that person comes very highly recommended, then or that team comes highly recommended, then you're able to take kind of that bet. So I would say go early, go very, very early. Talk to people. I mean, you don't have to pitch. You can just have a conversation. And VCs, if, again, it's solicited and comes through a good kind of reference check, then I think, or a good intro, then I think it's absolutely easy to go early and have a conversation. You don't have to pitch per se. You can say, look, I'm thinking of building this. What do you think? What's your view on this? And then that's a quick elimination of the VCs that you want to deal with or not deal with, because someone might say, you know what, this segment I don't really like, but best of luck to you. And that's fair. And then when you come to pitch, you've kind of narrowed down a little bit your area of interest. And on the flip side of that, someone might go like, I absolutely love this. I'm ready to write you a check right now. And that could happen. That could happen. So those are kind of the extreme ends of the spectrum. So you want to make sure that you can do quick elimination of the negative side of the spectrum, but then latch onto the positive side of the spectrum just by a conversation pre-pitch deck. This is what I'm thinking of doing, especially if you're super, super early. The second thing, I think the second question is really around pitch deck mistakes.
Yes.
I think the first problem with pitch decks is that founders fixate on pitch decks. So I think like the pitch deck matters to a point, but I think the narrative being told in the meeting is much more important. And the narrative should absolutely match the pitch deck. And one of the biggest issues I see in the way people present and as reflected in the pitch deck themselves is, you'll go like 20 slides without, explaining like how amazing the product is without explaining what the problem is, or spending kind of 30 minutes talking about an industry without explaining what is the issue you want to tackle. So I think this, there's something really fundamental about being punchy in and explaining your proposition, starting with, this is who I am, and this is the problem I'm looking to solve, whatever that problem is, in like concisely, like very, very sharply. This is how I'm going to solve it, and this is why I'm best placed to solve it, and this is the size of it if I solve it. If you can do that in like 5 minutes, 10 minutes, I mean, that's an effective meeting, and that's an effective narrative and an effective pitch deck. So I think really go down to articulating the absolute fundamentals, and then you go from there, I think, talking about the details of the market structure, how you got to the TAM, thinking about the revenue model and why it would work,
and how the founder profiles actually
feed into it, and the team that you've recruited, and your projections, and the intricacies of the product. You want all of that flows from there, but the principal core thing is, what is the problem, how is it being solved, why solving it is lucrative, and why is this the best team to solve it. I mean, those are kind of that's the gate. That's the initial the gate to be distilled in. Because remember, like VCs are seeing, thousands of pitches a year, right? Like, so it's an easy elimination. And most VCs will eliminate within the first 5 minutes, 10 minutes, but they'll can sit through the meeting, but they've mostly eliminated it within 10 minutes.
Wow.
So that's you have it, think about it. It's like dating, right? Like you make an impression. You make an impression within 10, 15 minutes. But after the 15 minutes is over, like, you probably know which way the date is going, right? Like in your head. There's a mismatch here, unlike dating, which is that the founders are only going to have 30 or 40 of these meetings in that, probably in that, maybe 50 if it's a really big fundraise, in that sort of fundraising round, right? VC is seeing like, he's seeing 50 every 2 weeks, right? Maybe. So it's just total imbalance, right? Like, and sometimes VCs, can be quite dismissive because they're just like, going, and that's, on us. Sometimes we need to figure out how to do that better.
Isn't that similar to the dating scene? Like, ladies have a lot of options, whereas men sometimes don't have as much.
That's a nice way of saying it. I was going to say it's like when you have in a dating market like a high value, one of the two people is kind of more high value and has more options, which tends to be more women, right? Versus the other that's slightly less value, less perceived lower
value,
status or value, whatever. So I think there's a bit of that going on. So, but it's a good analogy. I think the dating market's a good analogy.
Sometimes, and you can see this visualized on shows like Shark Tank, the startup comes on and they sort of embody this like high value quality about them, and they're able to command that room and command those like high investment values for less equity. It's all like what's your take on that? Like, is there anything that they're doing that others are missing out on in those situations?
So Shark Tank, I'm not a fan of the. I mean, I don't mind. It's a lot, but it does distill some of the dynamics, though, in a somewhat caricaturish and way for television, obviously for entertainment. So I get why it's done like that, but the broad dynamics kind of right. To your point on like commanding the room, I think it's some people have like anything, whether you're a startup founder, politician, or salesman, or whatever your job is, CEO, corporate CEO, you're corporate executive rather. I mean, inbuilt charisma and leadership is not easy, right? And it's somewhat ingrained. You can learn it, parts of it, and you can, I don't want to say fake it, but you can develop it to some degree.
Sure.
Yes.
But there is a natural level of having it inbuilt that some people can just, like you say, command the room. And it's an incredible balance of, when you think about what does it mean to command a room and inspire the people you're telling the narrative to. So it's being punchy in your narrative, being concise, being clear, being able to articulate your point in a way that is empathetic to those across, so they understand where you're coming from.
Yeah.
But also, it's illuminating. So it's kind of it switches a light bulb, right? So empathetic, concise, clear, spoken with confidence, but not overconfidence. So that's if you're overconfident, there's a line, right? If you sound like overconfident, that means that you won't react to the market, so you won't evolve, you won't pivot, it's off-putting. There is such a thing as being too salesy. That's very off-putting to people. It's off-putting to me, so I'm the opposite character trait. So when I get a founder that oversells, it immediately makes me suspicious. If you're it's like, I'm gonna sell for $20 million in the next 3 months, that's my ARR, and from zero, I'm like, let me tell you, I guarantee it. And it's like when someone goes way overboard, it's like I just don't trust the person, because I know they're bullshitting me.
Big claims.
Yeah, I mean, it's okay to be confident, but it has to be grounded not in overly salesy language, but in some kind of substance. And you want to see confidence in vision, not in tactical stuff. In like, or you can overpromise on the macro, on the high level, but if you overpromise on small tactical stuff that you just know is not going to happen, and you just say it in a very salesy way, it's quite off-putting. So if you can distill all of these things, then you command the room with a natural charisma, a natural confidence, then you can do that. But it's not easy. You a lot of people who are just born with it, they have 80% of it, they learn the remaining 20%. Other people it's the inverse, they have 20%, they have to kind of learn the rest.
They have to enhance themselves. So it doesn't mean that introvert founders won't get funded. It's just that they'll need to work on themselves, and I'm sure the doors will open.
Another thing that I think is undervalued is just being genuine, like being real about like what you're worried about, you're not worried about. That's kind of the flip side of the over salesman, like the used car salesman, right? Which is off-putting. It's someone who says, can deliver this, but I'm concerned about this. But I'm pretty confident we'll mitigate it in 1, 2, 3, 4. So that shows a maturity in thinking. And it's not just about style, it's also substance, because you want to reflect someone who's thoughtful in their thinking, seeing different angles. And that's what we're kind of looking for as investors. But it's also intuitive. Anyone will feel better when someone is relaying it in that way.
Well, look, that's about all the time we have for the episode. But if you could leave our viewers with any small nugget of knowledge, apart from all of the really valuable insights you've had so far, what might that be?
I think for founders, if the audience is the founders, I think there is sometimes an easy preoccupation with fundraising as the next big milestone, and raising a big round at the maximum valuation being the kind of most important thing that you go for. Whereas actually that is just a outcome of building a great business. So focus first and foremost on building amazing businesses that solve big problems for the maximum amount of your clients, right? Like and solves them in a big way. I think that is what leads to the funding rounds or the valuations, etc. And you might not need the funding rounds if you execute excellently, right? So like one of the best companies I ever did is a small gaming business, but exited for over 100x. That raised one time, tiny amount of money, $1 million, and exited for 100 times. And that's because the founders were not interested in chasing necessarily the next big funding round, next big valuation. They want to build a great company. And I think that everything flows from there. And remembering that a company is about, building products that other people want, and doing that profitably and at scale and efficiently. And, sometimes going back to first principles or basics like that is often forgotten in this kind of startup VC maelstrom, right? But just go back building a company. Could be any company, but just build a great company with great products, great service that solves a big problem profitably, and everything will come from that. The exit, the funding, the attracting the right team members, whatever it is you see as hallmarks of success, they'll come based on that base.
Yeah, amazing. Thank you so much.
Thank you for that.
Awesome. Thanks, guys.
What an insightful episode. We really appreciate it.
Anytime.
Thank
you guys for doing this. I think it's a really, really good podcast.
It was a pleasure having you. Yeah, it's a very good.